The mid-cap index much better, doing much better than the benchmark, up about 0.3%. On the other hand, small-cap index up about 0.7%. Let's also pull up the advance decline ratio, firmly in the favor of the advances right now. Yes, started off strong, switched a little bit in the middle in the morning trade, but now again firmly in the green. Let's also look at the sectors as well and see what's doing well and what's not. You have pharma index up about over 1%. You have PSC also up 1% in trade, followed by energy and PSU banks. Pharma doing very well for the second day in a row. On the other hand, finance and bank as expected. There's services, realty, media and auto also in the red. Let's also talk about some of the specific counters that are moving. Let's pull up Raymond. Now, it announced a demerger of its realty business and it has a swap ratio of 1:1. So if you're holding a share of Raymond, you're going to get one more share of the realty, and it's up 17%. Now, while this was on the cards, it was quite expected, but still the stock doing fairly well in trade today. Let's come back to HDFC Bank, which is the focus for today. And as I mentioned, single-handedly bringing the index down. Now, it came out with its first quarter numbers, not a good set of numbers for sure. I'm joined by my colleague Harsh to break down those numbers. Harsh, tell us okay, we saw the numbers. Not a good set of numbers, stock being punished in the market. But what are you understanding from this set of numbers, and what are we set to see beyond the first quarter numbers as well?
Well, yeah, absolutely. So to kind of contextualize this first off, absolutely flat from a deposit growth perspective, 0% growth. But you saw Q4 FY24 at 7.5% sequential growth, which was extremely strong. So it was a higher base, of course. They've been able to maintain that at 0% now, so not really growing at all in Q1 FY25. And the real concern is with regard to loans, though. So you're looking at loan growth, which is minus 0.8% on a sequential basis. And in Q4 FY24 as well, it was just about 1.6%. So essentially, the growth over 2 quarters is less than 1%, which is abysmally low. Of course, reasons for that, management commentary awaited, which will likely come out post the results on the 20th of July. So that will be awaited and keenly awaited. But just in terms of what's not doing well, wholesale is not doing well, and retail, they are ceding market share as well. Retail loan growth not really picking up in the way it ought to for HDFC Bank. It's also a bit of a conscious calibration with regard to bringing down that loan to deposit ratio, in likely to try and focus in on margins as well as profitability. And that will be the key pieces which will turn things around. One is your loan to deposit ratio needs to come below the 100% mark, which is currently at 105. Margins need to go up from the 3.5% all the way to 4%, and you need to start seeing EPS growth. So likely the street not anticipating too much of that in this quarter at least.
All right. Thank you so much, Harsh, for those details. Now, let me introduce you to the guests. We are joined by Rajat Bose, and we'll shortly be joined by Vineet Bilinchkar as well of Ventura Securities. Rajat, I'm going to come to you on HDFC. While, of course, there's a fundamental trigger on the counter, but only a couple of days ago, we were talking about HDFC for a completely different reason, right? And today, the stock is being punished. However, there is obviously... I
put my other network, this thing is...
There is obviously a reason there's obviously this thing in the back of mind of investors about the MSCI, these passive flow that might come in on HDFC Bank. How are you viewing this? And talk about the Nifty Bank Index as well, because HDFC Bank is pulling that down as well. Right. All right. Seems like there is an issue with Rajat. with Rajat. All right, we have Vineet on the line though. Vineet, thanks for joining in. Welcome on Ask Profit once again. We were talking about HDFC Bank. I don't know if you had a chance to listen to what Harsh was talking about. He broke down those numbers for us and talked about not a great performance. And I was telling Rajat as well that second time we're talking about HDFC Bank in just a week for a completely different reason. But Vineet, this is obviously a seasonally weak quarter as well. There's an effect of merger as well that's on the numbers. How do you see this kind of playing out from a longer term perspective? Obviously, management commentary is key and we're going to listen to that. But how are you seeing somebody who's holding an HDFC bank? We saw a run up in the counter and now down about over 4% in trade today.
So, there are a couple of things which are at play. One is the technicality of the MSCI weightages. So, when it's below a certain threshold, what happens is that the weightage of HDFC Bank goes up. But next quarter, if the weightage is in accordance with them, the allocation in accordance with the MSCI, then the weightage comes down. So we are going to see these kind of fluctuations happen when the flows come in and go. Having said that, if you look at the performance, they've done a remarkable job of managing NIM. Second thing is, NIM growth will still take a while. I think more important is to get the deposit mix right. The CASA ratios have just not coming in because there are pressures from the market as well as the fixed deposits which are attracting very attractive rates. Also, there are certain banks which give you very premium deposit rates. So, getting the rates back is a challenge. And, while they have tweaked their lending yields and managed the NIMs, you can't continue to do that for a very long time because, your asset quality may suffer. So keeping all these things in mind, I think, it's still a wait and watch on HDFC Bank, more of a trading play. And we need to see that they will take at least another couple of quarters before they get it right.
All right, fair point. Let's start off with the queries. The first one is on IRCTC. The question is from Vijay. They bought the counter at a price of 942 rupees. It's currently trading above that price. Vineet, we've seen about 15% upside in this year and something like an IRCTC. For somebody who's holding at lower levels, would you suggest that they should continue holding on to it? How does it look fundamentally from a longer term perspective?
So I think, they run the monopoly on the railways, and with the way the government is modernizing the railways, the experience of airports coming back to the railway stations, I think we are going to see railways which are already well housed, capacities are high. We're going to see better quality of passengers move along railways. And that augurs very well for IRCTC. So not only from passenger traffic, but also from the tie-ups that they're doing with Swiggy, the Zomatos of the world. And so I think, with a lot of Vande Bharats also being added, premium pricing will come in and their profitability is all set to improve with revenues increasing.
Right.
So I'm definitely, this is a good hold and we think that, this stock over the longer period can touch around 1,300-1,400 rupees over the next couple of years.
All right, 1,300-1,400 in the next couple of years for IRCTC. Vineet, the next question is on Cochin Shipyard. The question is from Raj Kumar, who's writing in from Bangalore. They bought at a price of 2,100. We've seen massive rally in not just a Cochin Shipyard, but the whole defense pack. Now, of course, valuations now seem expensive, but they're also getting these large orders consistently. So what should somebody do? Should you maybe take some profits off the table at this juncture, or should you continue holding on to it because this rally doesn't seem to end?
So, this rally is on the back of very thin market liquidity. So the percentage of the free float is very minimal. And, with this, the speculators have been able to corner the stock and take it up to dizzying heights. It's easier to control the counter. And also the bullish side sentiment and the order bookings is helping that. But, we are over a period of time, we are going to see a lot of paper come in the market. And that is a time when, you will see the a flip side of this, very expensive trades, especially the defense stocks. So my advice would be to take little profits off the table, maintain tight stop losses, and enjoy the ride.
Vineet, is that...
And keep,
Vineet,
Yeah.
that is for the whole defense pack you're talking about, or just
Absolutely,
potential?
absolutely. Just for the whole defense pack. But within that, HL has got a very humongous order book, and so do the other players. But HAL has better margins, better return ratios, and so there, I still think that fundamentally there's a little bit room on the upside of around 5 to 10%. But given that, I think for the entire block, I would be very wary of the valuations.
All right. The next counter is Jindal SAW. The question is from Anand. They bought the counter at a price of 540 rupees. It's not up about 1% in trade, 540, yeah. So a little bit of a profit there for Anand. What's the long-term view on this?
So we like all these saw pipe and pipe manufacturing companies. We're going to see them do very well in the coming quarters, and you can continue to hold on to that stock.
The next counter is Samvardhan Motherson International. Now, this is from a longer term perspective. Beneath auto space, we also looked at the FADA numbers just right before the show, actually. And but overall, this is we're talking about an allied services in terms of auto for something like a Motherson. Would you suggest buying at this juncture is the question at the current market price? Is it too expensive at this point?
So it's not expensive. It has got good legs of growth, and it can get continuously re-rated. But during the short term, if you're really looking to buy into this stock, I think buying on dips would be a better strategy. And you continue to hold on to this stock. So, what we like about this complete story is the fact that, it's a story of mergers and acquisitions. And these acquisitions are led by the clients who, instruct Samvardhan to go and pick up a particular asset which is available dirt cheap, given the fact that they believe very strongly in Samvardhan's ability to turn it around. And, you can see from the number of subsidiaries that they have, and they're all global, across geographies, across dialects, and they've been managed to pull off each and every subsidiary that they've taken over into profitable ventures. So they get assured supply from their clients, and they get very stressed assets which they're able to turn around and add value. So I think great company, good portfolio pick, but right now a hold and buy on declines.
Buy on declines on Samvardhan. Let's talk about Adani Total Gas. I'm not sure of the name of the person who's writing in. Viewers, please mention your name while you send us your questions. Okay, this one's from Mahindra. And the question was on Adani Total Gas. If you can pull up the chart, okay, it's not doing too well today. In fact, it's not been doing well for a while, Vineet. It's been months that the stock has given negative returns. But from a longer term perspective, somebody who wants to maybe buy the counter, would you suggest getting into gas stocks at this point?
Gas stocks are a great buy, but they are also structurally impacted by prices of the natural gas. And we expect natural prices to pick up going ahead over the next few months. So having said that, Adani Total, we do not see too much of upside from here. And we would ask you to switch. And if you want to be present in the gas space, I think GAIL is a better play because it is agnostic to gas prices.
All right.
Significantly agnostic.
All right. It's time to slip into a short break, but we'll be back and we'll take more questions on the other side, and hopefully we'll be joined by Rajat as well. Stay tuned. Welcome back. You're watching Ask Profit on NDTV Profit. We were in the middle of taking queries, and the next one is RVNL, a doubler in the last 6 months. Vineet, the stock has seen a massive rally, and I know you've spoken about railways, but let's talk about this specific counter. Now, the question is from Sushila, who bought the counter at a price of 156 rupees. It's currently, wow, very close to 450 rupees. For somebody who's had these profits in, would you suggest booking some profits, or would you suggest waiting? Because we're getting, there's constant news flow around these counters on order wins as well.
So I think, when the story is absolutely cheerful is the time when you take some profits off the table. And since she's sitting on a multi-bagger return, I would recommend selling half and keeping the rest of the half with a tight stop loss of around 400 rupees. I think great stories, but I think, they've outlived their fundamentals, or they've, run up too far too fast. So I expect some kind of correction happening out.
All right. Fair point. Let's talk about another counter, ITC. This one's from Balakrishna. While they're asking for a short-term view, we'll take a slightly longer-term view on an ITC. Vineet, it has done fairly well as compared to other FMCG players, right? Are you constructive on an ITC? We've seen that stock rally play out already in the counter.
So, we are seeing recently some, slight corrections, lethargy in the performance of the company. Also, their demerger play announced a year back is still to see the light of day. So, my view would be to, buy at better valuations on the stock. This typically is a defensive counter which, moves against the market, and especially when the markets are down, it's a very good hiding place. So I would not recommend buying this stock currently. I think levels of around 400 are better to look at buying those.
Let's take a short-term view on this one. We have Rajat Post back with us. Rajat, we are talking about the counter ITC, and Vineet is suggesting buying around 400 levels. Is that your view as well?
400 level means that your risk is much less, and what I would say is that if you buy ITC around those levels, you can expect it to climb back once again at least to 440. ITC will continue to remain range bound because you see in 2022 it was below 200, and then it went up to post a high of 499.70. When such a move happens within a short span of time, the next few months or could be a couple of years or so, it will continue to remain range bound. So in range bound stocks, you actually enter at a major support level, then you are much better off in terms of your probability of making money.
Got it. The next one is PSP Projects, Rajat. This one's from Brigu from Punjab, who bought it at levels of 780 rupees. So elevated levels for the counter. Their time span is 6 to 18 months. Do you have a target on this counter? It's not done too well, at least in the last 6 months, given negative returns. Even in a year, down about 6.5%.
The PSB projects needs to take out the level of 700. Why that is important? Because the 200-day exponential moving average, which is still moving down, that would be crossed because that is now languishing around, say, 700 levels. Once this level is decisively cleared, you can expect a move towards 728 to about 745. This range, once taken out, that is 725 to about 745, then you can expect it to gain traction. But as of now, what it shows is that some accumulation is happening, but we cannot say, looking at the chart, that all the supplies have been absorbed as yet.
The next counter is CCL products. The question is from Sandeep. Vineet, coming to you on this one, while this is a small cap counter, would you have coverage on this? Because I think in the last quarterly results, they talked about volume growth of about 20%.
So, we are expecting coffee prices to come off a bit. And given that, I think they should do relatively better because they are more into, selling branded products and they've guided well. So we think that this stock can be accumulated at current levels.
Got it. The next question is from Hari Om, who's talking about Bharat Dynamics. And Rajat, I'll come to you on this one. We've discussed the defense space with Vineet in quite detail. But let's talk about the specific counter bought at 1,652 levels by Hari Om. It's currently trading above that price. And what a run-up we have seen in the defense space. Would you suggest maybe booking some profits? How does it look from a short to medium term perspective on the charts?
In short to medium term perspective, it could still move up from here, but then this move has been pretty much ballistic right from say last year October to current date. That would, at that point of time, it was around 450. Now it is almost 4 times 1750. So if I were in his shoes, I would have booked part profits and use stop losses to protect my profit. And the stop loss as of now should be placed somewhere around 1700.
Got it. Rajat, the next question is on Suzlon. A very similar story. If somebody who bought at extremely lower levels now sitting on massive profits. We have a question coming in on Suzlon from Supriya, and the question is, what's the short to medium term play for something like a Suzlon, up about 4% right now?
See, again, this stock, if you look at it, just see, it started its journey from, say, about 8 rupees 50 paisa last year. Last year, May, late May, early June. From there, now it is already 7 times. It can still move up, but then one should put a stop loss below 48 and continue so long as this momentum carries on. But this kind of a momentum means that there would be some sharp fall like you have seen in HDFC Bank, which as of now looks pretty weak, and similar kind of weakness will be seen wherever the moves have been balanced.
Got it. Thank you so much, Vineet and Rajat, for joining us on the show today. Unfortunately, we're completely out of time in this edition of Ask Profit. And viewers, thanks for tuning in. Hopefully, the questions we asked today were helpful to you. But don't go anywhere. We have lots more lined up for you on NDTV Profit. Stay tuned.